What's up, everybody? This is Chris Talks Crypto. Want to make a video over some things that I've been looking at recently, especially concerning the different indexes and how they relate to the money supply. So right here we have the Dow Jones Industrial Average. So basically, we take 30 different stocks, and it's basically a weighted average of those. S&P 500 index is 500 different U.S. stocks, and it's a weighted average. And then the NASDAQ is the same thing, but it's 100 stocks, and it's a little bit more tech focused. And then you have the Bitcoin index. This basically looks at the Bitcoin prices across several different exchanges and kind of gives you an average price there, just so you're kind of getting the best number. So before we start, we're going to look at the USM2. So what is that? The USM2 is basically the U.S. money supply. So you take a look here. This is the basically the Federal Reserve. They put out these numbers, and this is the sum total of all the different cash deposits, savings, paper money, CDs, all these different things. So this is how it's kind of grown over time. You see, it's been somewhat of a linear trend. We've had some periods where it's spiked up, especially here in 2020, and then it's kind of rounded off here at the top. The reason that I want to look at this is because, again, the money supply deals with how much inflation you have. So, I look at inflation and I say inflation is basically when you have more money than you do goods and services. Like an increased amount of money with the same amount of goods and services is going to lead to inflation. So kind of like in 2020, right? So we had roughly at T equals zero with the pandemic. We had a certain amount of goods and services, but unfortunately, a lot of those ended up getting shut down for one reason or another. So let's say we lost some of the goods and services in the economy, but then we increased at the same time the amount of money that was in the economy. So at this point, people have more money to pay for stuff, but again, there's less things to actually pay for. So then the prices of those individual things goes up. So we saw that in the price of assets like stocks and housing, and crypto went up too, and all these other things, or even things like the grocery store. You go to the grocery store now, eggs are like $8 a dozen or whatever. I don't know how much eggs are, like maybe $4 a dozen. But anyway, you take a look at that, and this is your money supply. So the reason I want to look at that is because I want to relate it to what these different indexes are and kind of see it over time, like have these indexes really been performing the way that we think they do. So if we go back in time, we'll take a look here. We'll zoom out. We go all the way back to, these things go back to like 1985 and even farther for some of these. Like this, I think this one goes back to like the 1800s. If we go all the way back for the Dow Jones. But anyway, you can see over time, there has been a gradual increase, especially since like the 70s, we got off the gold standard. There's been a gradual increase in the value of the Dow Jones and the S&P and all this other type of stuff. And they'll switch stocks in and out here and there to basically ensure that this thing goes up and to the right over time. They're only picking the most valuable companies. So we take a look here, and prices pretty much gone up over time. And the same here, you see these all have generally a pretty similar shape. The NASDAQ is a little bit different. It's the newest of the three major indexes. It came out in the looks like the 80s, 70s, 80s. And it's more tech focused. So, it kind of ramps up as well. But, since the 90s, we've had tech going a huge tear. Of course, Bitcoin got here around 2009. So that's what we got there. But if you look at it, a reasonable person would say, oh, yeah, well, the Dow Jones, the S&P, and the NASDAQ, they're all going up. My investments are going up. That's fine. But the thing I want to look at is how do your investments growth relate to the money supply? Like, so if we take the Dow Jones and we divide that by the USM2 that we just looked at, USM2, okay, that produces some type of curve. We'll do the same thing here. S&P divided by USM2. So you're basically taking the value of the stock divided by the index divided by the total money supply, right? And you're seeing which one is growing faster. NASDAQ divided by USM2. Okay. And I'll say Bitcoin for a little bit later. So let's take a look here. If you see on the right side, this is all of these are, it's basically zero because again, like the USM2, that's in trillions. These might be in the 4 or 5 digits. So anything you do is going to basically reduce it to zero, but that's not what I'm after. What I'm looking at right now is what is the shape of this curve? Like, what is the shape of the curve that we have? We can zoom out to 1960, and that's where the USM2 started being measured. So really, it can go two directions, right? Like up, down, or sideways. So if it's going down, then that means you have either a bigger denominator or a smaller numerator up here. So that means that if this is going down, then that means that the money supply is either growing faster than the growth of the stock market, or the yeah, I mean that's pretty much it. The money supply is growing faster than the stock market, and then it's the opposite if it's going up. So that means the stock market is growing faster than the money supply in that instance. So I mean it kind of makes it so that your gains are actually kind of there, right? So if we look at it, let's say you started investing somewhere in the 80s, right? So you basically went on a tear for all of the 80s and 90s if you were holding the Dow Jones. And then we've kind of been on somewhat of a downslope ever since. You know, we got to the tech bubble here, and you'll see this in all the other ones too. But like we got to the tech bubble, and that, you know, the money supply started to increase a little bit more, or the growth slowed. Again, we had this huge tech boom, and then stock market started to slow a bit. We had the housing bubble here. There's a pretty big bubble that we had with credit and everything, and then we saw that crash here to where stocks decreased in value, and then this is where we started quantitative easing, which is basically money printing. So we started printing money, and again, stocks are growing, and they're growing at a faster rate, really since about 2008 up to 2020, and then now we started printing more money, and they got up a little bit, and now we're on a downslope and so on and so forth. So that's the Dow Jones. Similar story with the S&P, all through the 80s, and then these are all similar shapes, right? They, like we said, they tend to move similarly. And if we look at the NASDAQ, this one actually did pretty well. So again, you see the same rise in the 80s, and then it's a much more dramatic fall for the NASDAQ, only because again these were tech stocks, and you're dealing with like the tech bubble. And then the NASDAQ really didn't go anywhere for a while. You came past 2008, and then we just went on a tear pretty much for stocks. So holding that, really between this period, like they say if you're holding this, the S&P or the NASDAQ or whatever, you're supposed to expect, maybe 10% a year. And that's, pretty sound advice. Again, I'm not a financial advisor. This isn't financial advice. We're just looking at the data. We had a pretty good, almost really a decade actually, until we hit COVID. And then, actually COVID was right about here. And then we started money printing again. And then we kind of, had a downslope in 2022. Like the whole market was down, crypto and everything. And now we're very much so on the way back up to where stocks have had a pretty good year this year. They've had a pretty good year, especially the NASDAQ, with a lot of the innovation that's been going on. But yeah, it's one thing that I want to look at is Bitcoin, right? So again, we've had these major periods of like downslopes for all these other ones, but what has Bitcoin done? So we haven't looked at that. So Bitcoin, the BLX, Brave New Coin Liquid Index divided by USM2. The United States money supply. We're dividing that and seeing what it does. So let's do something real quick. So again, let's just take stock of what this shape is, the shape of this curve. So again, I see the 2013 bull run. I see the 2017 bull run here. I see, we had this dip here and leading up to 2022. Yeah, this was 2020. This was the last 2021 bull run, and then we had this major 2022 drop, so on and so forth. And then now we're here. So again, take stock of the shape of this graph, and now we'll divide that by USM2. Divide that by USM2, what do you get? In my opinion, again, we have BLX divided by USM2, but I mean, maybe you can see something different, but I don't see any difference in this graph. Like we see it's over here, this is 0, but we're worried about the shape. I still see the bull run in 2013. I see the bull run in 2017. I see, this kind of run up prior to COVID. And then I see 2021, this major bull run here. And we see the downslope for 2022. So all that tells me is that the growth rate of Bitcoin relative to the stock market, to the money supply, it's pretty much uncorrelated. They're not really correlated in that regard. Like you see this, the slope of these change drastically. So the Dow Jones, the S&P, the NASDAQ, the shape of those curves changed completely when we changed the metrics, right? When we divided it by the total amount of money that was in the system, the USM2. And again, that's your cash, your paper money, your deposits, your savings, like all of the stuff that's held in the banking system, the money supply that's in the U.S. So again, we take this off, we stop dividing by the USM2, and now we have something that's just gone straight up for years, decades even, gone straight up. But if you do it the other way, then it's just ranging, and you basically have like a whole bunch of nothing. This whole time it's been going up, but we saw that it was coming down if you start dividing by that. It's not the same with Bitcoin. It's not the same at all. As a matter of fact, we'll zoom out here, right? We'll go all the way over. Oh, why is it doing that? Anyway. But yeah, anyway, the long story short, the shape of Bitcoin's chart does not really change if you divide it by the USM2, and that gives me optimism, because it's like, okay, well, now you have some type of asset that is unaffected by the amount of money that is in the market. So it's kind of independent, which is something that you want, because like now your money isn't necessarily tied to what the U.S. government is doing. Again, Bitcoin is a global asset. It's not controlled by the United States. It's not controlled by France or the UK or Japan or China or Russia. As much as they try, and believe me, the US has tried, China has tried several times, but it's become futile. Even the International Monetary Fund has basically said, yeah, attempts to regulate Bitcoin are not they're not going to be fruitful activities, or to ban it or do anything. We've seen several instances of that, but that leaves me with a strong sense of optimism, just because, again, now you have an asset that is proven resilient to the money supply, and that's really been killing people's pockets with inflation. I mean, since I was born in the 90s, like we've seen the cost of living just absolutely double in this time frame up to 2023, and we see people, wages haven't increased in proportion with the cost of things. So I mean, if you have an asset that can withstand the onslaught of inflation, the onslaught of money printing, then you found yourself something good. Again, none of this is financial advice. I'm just here to present the data to be able to show you that, hey, there is something out there. And I'm sure if you do the same thing with Ethereum, you'd probably see the same thing. But yeah, just something to look at. I just like the fact that this is unaffected by the amount of money supply, that we have here. So that's basically all I got. By all means, reach out to me, ask any questions. Again, this has been Chris Talks Crypto. Check out christalkscrypto.com for any type of crypto resources, and I'll see you on the moon. Take care, guys.